So we're going to be focusing on the UK 100, so FTSE 100, the DAX, and maybe a few other things that we may give you some pointers today. So we've obviously been seeing a big decline. You can see this is a daily chart on the FTSE. Big move down, aggressive selling coming out because of what happened in America with the bank, and that spread worries over to Europe. Certainly Credit Suisse was influencing the market, but Credit Suisse bounced back and we've seen a bit of risk appetite come back. Can we go lower? Yes, but yesterday was a good indication for me that the market was stabilizing. So although the trend is down, we just need to be a little bit careful that things could start to push up. Now, this is quite an extended move down. A 23% retracement of this is at 7,500. So that would be your obvious level if this continues to move up. We've got the MA200, which is this this blue line moving across here. That is at 74.23. We've also got gap close today at 74.10. Does anyone not know what gap close means? I can, of course, let you know quickly what that is. Does everyone know what gap close is? So basically, where the FTSE closed yesterday, we call that the closing gap. And most days when the European market opens, the FTSE opens at 8 a.m. UK time, it'll either open above 74.10 or open below 74.10. The closing price will vary every day. So today we are actually trading well above 74.10. We'll go and have a look at the chart. So this is a Go Markets chart. We can see FTSE's trading at 74.60. So we're about 50 points above yesterday's closing price. So, you know, at the moment, things are looking quite good. You know, pre-market, certainly quite bullish. So do I want to just sell for the gap today? Well, Fridays are usually good for profit taking, but can't really say there's much profit taking to be had this week because we've been crashing. So, okay, the Friday mix doesn't sing true so much today. The trend is down at the moment, so that is good for the gap, for the market to move down to 74.10. Yesterday's high, let's just have a look at yesterday's high. So this is pivot point data that I'll look at every day. We provide this to our clients on our blueprint program. You can see that yesterday's high was 74.58. So you could argue that if we start moving above this today, then we should easily be able to move up to the 7,500. So with that in mind, if we were to do that, where would we put our stop? Well, we've got our daily pivot at 7,400 and we've got the MA200 at 74.23. So that's quite an important level. I would say if we have it, if you're going to get long today, we would have our stop acceptance below 7,400. I'll talk about what acceptance is in a second. The other thing we could potentially look at is if we spike. What I mean by spike is if we open and we push up aggressively above 74.58, but then retrace very quickly, we might be able to get in on a very low risk sell with a stop above the highest price, and again target some of this gap close down at 74.10. And then for buys, as I said, if we can get down towards the 74.25 to 74.10 area, that might be a low risk buy for us. Again, I would use some sort of acceptance below 7,400. So acceptance is when you get a full 1 minute bar or 5 minute bar. I use the 1 minute bar in the first 30 minutes. Closing body and wick below the level in question. The reason we use that is the markets will go for obvious areas in the market for stops, and they'll clip them out. If you use acceptance, you're almost invisible to the market. It's a psychological stop. So you're looking at the chart, you're seeing it really is price action accepting or not above or below that level. And if it does, you exit. And it just gives the market a little bit extra time to unfold, because as we know in the markets, there's lots of false breaks in the market. The market can just come to your stop loss, trigger you out, and then off it goes, and you're just left frustrated. So a lot of people lose a lot of money in short-term trading because of their stops. We like to use acceptance. We want to be doing things that are different from everyone else. If we do things exactly the same as everyone else, we're going to lose money. Okay, so everyone is very familiar with techniques such as technical analysis and fundamental analysis out there, and how to place a stop and moving averages and things like that. Well, if it was that effective, ask yourself, why do so many people lose and fail at trading? So you've really got to start looking at the markets a very different way than everyone else, and then you'll start to make money. So it's reprogramming your brain to think very, very different to the herd of people out there. So that's my 2 pennies on the FTSE at the moment. I want to really see if we hold above 74.58 first. Maybe a false break will get us in a sell, or if we move aggressively down towards 74.25 to 74.10, we may look for a low risk buy. Let's just see if Cameron wants to give us a quick highlight on what's going on with the DAX as well before we open.
Okay, thanks, Mark. Yeah, so certainly a lot been happening this week in the markets with all of the bank situation. But overall, our feeling is that the market, certainly in the US, has rebounded. The DAX has been held back a little bit, but personally, I'm waiting for the market to get back into positive zones, which I'm expecting. That really starts. Maybe I could show you on the charts. Let's see if we can just get over to that and give you a very, very quick roundup of that. Okay, all right, so here we're looking at a daily chart of the DAX market. What we can see is, if you can see how the market has been moving since February in a channel sideways. We broke it this week on the news. We came down, we found support at previous levels, and now you'll see these orange lines. If the market can push back up above basically the 15,150 to 15,200 levels, I think we're back in positive territory. This looks fairly positive. The market's just been flushed out. If we start breaking perhaps below sort of 14,600, I think we see further downside. But at the moment, I'm expecting the market's going to push back up, and we'll start getting into buy positions above the 15,150, 15,200 levels. So we're going to watch how that plays out today. We do have expiry on the DAX as well. That happens at 12 midday. So we'll just see how that plays out. But at the moment, I'm not looking for trades until we start breaking back into positive territory. All right, Mark, so let's just see. We are at 4 minutes away from the open. Let's see if we've got any questions coming
in. So Sonia's asking the closing price on a chart. So what I would recommend is that, look, you don't want to get your closing price of the FTSE or the DAX off a broker chart. I would just Google it, to be honest. You just want a free resource. At the end of the day, or before the market opens, just Google FTSE 100 or the DAX, and it will give you the closing price. And then you can literally just put a line across your chart of where the gap is. But if you take it from a broker chart, it's not going to be factoring in an auction price. The auction is a 5-minute window after the FTSE closes. The FTSE will close at 4:30 UK time. There's the auction period, which lasts 5 minutes. That's tallying up all the buy and sell orders, and then you get your official closing price. So as I said, the easiest thing to do is just Google it. Google FTSE 100. You'll get the closing price. Put the line in every day on your chart, and then you'll know where it is. All right. So I think, yeah, let's go back to my screen, if you don't mind, Cameron, and see if we.
No problem at all.
So remember, it's on the line. It's on the chart anyway. 74.58. That's yesterday's highest price. So that will be quite important this morning. Yeah, can we start? I mean, I'm of the view that we're going higher. I do think we're going higher today. So we want to see. We don't aggressively want to get in too quickly. We almost want something to happen where the retail market will get stopped out, and then we'll get involved. But what I would say as well is if we did get a really powerful spike down towards the 74.28 to 74.10 area, I would probably be looking to buy that today. And again, my stop would be acceptance below 7,400. So you could base that on 22 points below 7,400. So around 73, 78, guys. So let's see if we get an aggressive spike down. I would prefer the spike to be at least 40 points. So at this stage, I'd actually be wanting this to go all the way down towards 74.10. So let's see. All right, we are open. So okay. Moving up above yesterday's high. So at the moment, all looking quite good. We've shot above 74.58 level. So this I would expect to move up to 7,500 today at least. So we'd be wanting a pullback in the market to get long for 7,500. But that's a nice open. Quite a nice bit of volume coming in there. Looks quite positive. Now, scalping traders as well. I mean, you need to be very quick for this sort of thing. But again, as you come to these very key levels, so 74.58, this is where you can look for very low risk buys. So you basically you get in long, and then you're out really if it starts breaking below 74.58. But that's more of a scalping strategy. It can be very lucrative because you've got a very small stop, and you know where the market you know where the market's potentially going, 7,500. So that's another form of trading. If you're new to trading, though, I wouldn't look at scalping. But if you've got some experience, you know, these key levels can give you very low risk opportunities. You know, even now it's pushing up after just testing that level. And then as it moves up, you can take half profits to pay for stops. If it does take this level out, you're not going to lose anything. What do I mean by taking half profits? I mean, if you bought this, say, £50 a point, then as it moves up, you could close £25 of that, put the stop below, so if it does drop below, you don't lose anything. So you're using the move as it goes up to pay for the move if it moves below 74.58. Does that make sense, guys? Does that make sense? What time do I recommend the FTSE 100 be traded? Well, you put stocks, but I think you mean FTSE 100. I love trading the FTSE in the first 30 minutes. So it's the golden 30 minutes. It's when FTSE's a little bit more volatile, and you can get some very low risk entries on in the index, small stops, and aggressively manage them. As after the first 30 minutes, the markets can slow down, and it becomes a lot more frustrating to trade around important zones. So that for me is golden 30 minutes. I mean, you can just see how lucrative this move is here, as it came down to this red line, which we identified. Again, what's your stop on this? Well, it's only 2-3 points, because had it failed and gone below there, then you're out of the trade. It hasn't worked. But so your risk reward can be very, very great on these trades. But you've got to have the discipline and patience to come out. If it drops below here, then you can't be thinking, oh, maybe it will come back. And that's actually quite a good reason why I like trading the first half an hour, because you're less likely to get too involved with where the market's going. You're not going to have a view of where the market's going because you're getting in so aggressively. So in your mind, you're happy to come out of the trade quickly, because we know there's a full day ahead and you don't want to be trapped on the wrong side. So again, what are we seeing now? So we've seen a good 5 minutes forming above 74.58. So for me, looking positive. So if we did get a drop back, this is in addition to the scalping trade, but if we did get a drop back down towards 74.30 to 74.10, I'd be looking for reversal buys there with stops below 7400. But of course, whilst we're above this red line, this can go all the way up to 7,500 fairly quickly. If you've got any questions, guys, feel free to let me know. We do have expiry today as well. Cameron, you got a fun fact on the NASDAQ. Maybe you don't mind sharing that with the group.
Yeah, sure, certainly. So the NASDAQ in the last 8 years, we have had 7 up days. So potentially positive day for the NASDAQ, certainly statistically from the last 8 years on triple witching, tying in with St. Patrick's Day as well. So let's see. Certainly the NASDAQ, looking very, very positive. We've had a big move there overnight. If you are looking at the NASDAQ, certainly for myself at the moment, while the market, maybe in the sort of mid-term, maybe not today, but while the market's trading above 12,000, I'm seeing we're going to go to 12,800. We could see that today. Beyond 12,800, we're up to 13,000. Once we get there, we'll have a look at the market again. But beyond 13,000, we're going to move a lot higher. But everything looking very, very positive for the NASDAQ, and potentially, statistically, a positive day as well.
All right, so we continue to move on up on FTSE. We'll see if we get up to 7,500 before we end this session. Later on in the day, we have expiry. So that's going to be at 10 past 10 UK time. It's one of our highest probability trades. It's linked to options, but we don't actually trade options. We will trade a CFD or a spread bet if you're in the UK. But what will happen between a 5-minute period at 10 past 10 UK time is options will expire, and what you'll see is some big price movements come in, which we're going to take advantage of and trade them back to a point of parity where we expect it to come back to. We do this every month we meet in a live room exactly like this, and we trade it with our clients. The beauty of that is you can plan your life around it. You know, it's going to be around 10 minutes. You know, it's going to be the third Friday of every month. Every quarter, we have an event known as Triple Witching. That's when options and the futures will expire at the same time. So that's why it's called Triple Witching. But we'll be getting involved on that today. If that is of something of interest to you, let me know and I can send you information about it. But it's a very popular trade with some of our clients. Sonia was saying, what was the stop loss? Well, the scalping trade was a stop loss really of 4 points, because it's a case of, as it moved down to this red line, if it doesn't hold, you just got to come out. If you want to give it a little bit more sort of time, which I don't recommend in this particular market environment because I've got a lot of volatility, but when volatility comes down, I'd be looking at acceptance or 1 minute bar close and break on this type of trade around a key level. But today, when volatility is very high because the market's been crashing, you don't have the luxury of waiting for a 1 minute bar close and break or acceptance, because by the time that's happened, the market could be down, you know, could be 30, 40 points down. So Sonia, yes, today is just a case of if it starts moving below this red line, you're out. You're out of the trade. And as I said, this, whilst we're above the red line, should move up to 7,500. Jeff's asking, do we trade expiry on any other markets? No, we find it works best on FTSE, because again, the FTSE is a smaller market. It's not so volatile. It's easier to trade during that time, and it just works so well. Every market also has their personality traits. Like the DAX is very different to the FTSE, so it's always good to decide on what market you're going to focus on and really trade that and know it inside out. So FTSE moving on up to 7,500. This is where, if you were in this type of trade, you'd be taking profits because look, you've risked 4 points, and look what you've made. You've made 30 points. So you'd be wanting to get out on a front run. We call it a front run, which means get out just before 7,500. So I would call it, well, this sort of area actually, and book profits if you're following this trade. So today we have a Forex and gold trader, Carol. I said the reason we like index markets is we just find them a lot more predictable than other markets. We have traded Forex, we've traded everything. We've traded commodities, even crypto, and still index markets is where we make our money. All right, so we've had a bit of a front run above 7,500, which I thought might happen. We may get a bit of a retracement now on this move that we've just seen. I'm not going to be looking to buy up here for sure. I'd probably now be waiting now for expiry. I think the high probability move is gone. As I said, for me, FTSE it's that golden 30 minutes. That's a sweet spot for trading the FTSE. Predictable, it moves quickly, and you can get into positions with relatively low risk and high reward. After that, it's not as easy to trade, and it can be very, very slow. DAX, of course, is very, very different. That's got a lot more volatility, so that type of index you can trade for a longer duration into the day. Although, Cameron, what's your sweet spot really for DAX?
Well, the thing is that often early in the morning we can look for a potential breakout in the market. So normally we're going to look at the DAX in the first half an hour, and then really have perhaps other levels that we might have on alerts that we might look at later in the day. So pretty much after the first hour, kind of on auto really. Either we're into a trade and we have taken some profits. Generally in the DAX as well, we like to run some of the trades of very volatile markets. We want to maximize those profits to perhaps higher profit targets or lower profit targets if we're selling. And if we don't get something in the first sort of hour or so, then we'll just wait on alert, or perhaps even have a trade that will trigger by itself and work automatically.
So Paul's asking, what does expiry mean? So we're trading CFDs here, but you can trade futures, you can trade options. It's just another vehicle of taking a position in the market. So options, you can say, well, okay, in June, for example, or December this year, you could say, well, the FTSE, I think it's going to be at X level. Or it's going to be down at X level, and you can get an option to time with that one. And these options will expire. You can choose any month you want. Actually, you can just so happens March is going to expire today, but you can take them out for April. You can take them out for May, June, but they will expire, and it will create a movement in the market. A little bit like what we're seeing here. The market's going to be shooting on up or down, and we're going to be taking advantage of that because we have a very good idea of where the price is going to go to. It takes about 5 to 10 minutes. We're going to have a stop and a target. Been trading it with our clients for a very, very long time. As I said, if you want more information on the trade, then pop me an email, mark@magnetictrading.com, and I can send you some information on it. All right, guys, so FTSE banging on up at 7,500, which is where we expected this to go. So for me, the high probability move now is done on the FTSE. I wouldn't trade it now again till expiry. So I'll be in the live room for our paying members at 10 o'clock. Maybe let's switch over to the DAX now and see what's going on with the DAX, Cameron, because yeah, we're coming up to some key levels that you mentioned.
Yeah, sure, Mark. Let's we can maybe switch the screens. Let's have a look. So basically, earlier I was saying that we want to get up above kind of the 15,150 to perhaps even 200 levels. Let's just show you that. Okay, so you should be able to see my screen. That's the NASDAQ. We'll move back. Just been watching a bit of the NASDAQ while we've been moving through this session. Just as a pointer that we often also trade the NASDAQ out of hours. It's in its futures hours at the moment. So there's quite a bit going on this chart. Don't be too distracted. But what we can see here in the dark green line, this is the daily kind of highs where the market broke through, went into a breakout. Today, I'd like to see the market get above this green line here. Then we can start to look to potentially buy some pullbacks in the market, as I think that the market will rise higher. The slight complication that we have today is that expiry morning can consolidate. So it's a day where I'm not looking to take a breakout. We'll see how the market performs, and what I'll do in this kind of situation where I haven't got a trade at the open, we're sitting at sort of 18 minutes past, I'll put alerts around these levels for me just to go back and look at the charts, make an assessment, and then maybe get into trades later. Should the market, Mark's been talking about acceptance, if the market's going to accept beyond those levels, then it's moved for myself back into a positive territory. You know, again, this is my view on the market. It doesn't have to be correct, but my view at the moment is that, you know, the downturn that we've seen is on the back of the banking crisis that we've seen. What we've seen is that all governments have come out and said they're going to backstop the market, backstop the banks. So therefore, really nothing has changed for me. Now I just need to see that the market gets back into its positive zone and beyond, and then we'll look to buy some kind of pullback to move the market back up to the highs. So that's what I'll be looking at today. I'll set some alerts around this level here, which just out of a note is Camarilla breakout long, something that you could have a look at. But in very simple terms, it means if the market can move beyond that level and hold beyond that level, that it's likely to move higher. So we'll wait and we'll look for that. And of course, we've got some good indication that America should be moving up. So perhaps in the afternoon, we could be looking to buy this.
Sure. So Mike Smith's with us as well. I know we've got some Trader IQ clients here as well. So Mike's just saying, look, if you guys have got any questions on expiry, just email Mike and he'll send you some information about that as well. Just a question there, Cameron, coming in about the hour chart.
Yeah, so basically, is the high and low taken off the one last hour chart or the prior day? So basically, for highs and lows in the market, we generally use a cash chart, which is from 8 a.m. UK time to 4:30 p.m. UK time. So it's just the cash market. We measure all of our kind of levels off the cash chart. So no, I won't be using that, but I will use other things. Like I'll look at sort of what the 4-hour levels are, or so on and so forth. But again, we don't want it too complicated today. But at the moment, what we're doing is we're breaking out of a 4-hour level, but we're coming up to potential resistance in the market from a daily perspective. Mainly, guys, for Mark and myself, for our key levels in the market, we're looking at daily charts and 4-hour charts. And then for myself, I'll assess my trading for the day off an hour chart. So when exactly is expiry for the FTSE today? It is at 10 past 10 UK time.
Susan's asking, are we doing expiry in here? No, we're just doing the live open with you today. Expiry is just for our members. But Susan, if you want to get involved, I put a link into. I'll send it again, and I'll put it in the chat box. That will give you all the information about expiry. As I said, any Trader IQ clients, you can always email Mike as well. But yeah, that'll be 10 past 10. And if you don't want to get involved, I would also recommend just watching the action. Come up to the screen at 10 past 10 UK time and just see what happens. I think you'd be very surprised. Expiry for the S&P. I think expiry for we don't do it, but I'm pretty sure expiry happens at the market open, Michael. So yeah, I think it's. Well, I know the Dow does.
It's market open. All US markets market open. Yeah, today.
Yeah. But we don't trade the expiry for them, Michael. We haven't been able to systemize a trade on that one. yeah, that will happen today as well.
I suppose it's fair to say, Mark, that that because the FTSE expiry happens not at the open, you haven't got the opening effect. Whereas what we do know in the American markets is it can be wild for the first half hour until it settles down. So you've got the open plus the mix of the expiry, and it doesn't create a trade for us there.
It's going to be the expiry, Robert, will be 10 past 10 UK time. UK time. So at the moment it's 8:25 a.m. in the UK. Yes, Michael, yeah, 12 p.m. German time. Okay, Susan, just pop me an email about that. Sure, I'll look into that. I think so, Rosalind. Yeah, I mean, just if you do what time wherever you are in the world in Google compared to UK now, you'll be able to work it out. All right, guys. Well, I think we'll wrap it up there. Hopefully you found that of interest. But yeah, we regularly meet our members. We like to focus on the first half an hour of trade. And then if there are very key levels in the market later on, we identify them as well for our clients to trade. So I may be seeing some of you for expiry. If not, it's been a pleasure talking to you, and hopefully you found that interesting. If you've got any information, any questions, then feel free to email us. You can email me directly, mark@magnetictrading.com. Stay safe out there. Very volatile markets at the moment. So yeah, if you're trading, make sure you use a stop loss. Don't get tied into a view. Although our view was where it was going today, myself and Cameron are very quick to change our view if price is not supporting our view, because the market is always right. We are not always right. Remember that. Cameron, any further comments before we end this session?
No, not really. I think for the guys, it's just again, if you do want to look at the DAX to see how the market progresses above the 15,200 levels, you can look at that perhaps over the next week or so, or see how it progresses today. But certainly, once we get back above there and we can hold there, I think we're going to see some higher pricing.